Vince, one of the areas that I looked had low representation was IT.
Yeah.
It's been one of the markets full of momentum, very high valuations, low earnings. Was there a temptation to look at some of those names that have been, in the Australian market? There's been a couple of high flyers.
Yep.
Did they just not pass through the four-step process, the filters?
So a lot of them pass through the filters, except for the ones that don't make any money. The concept type style business, we struggle with those because of the four quality filters. One is you have to make money. They have to be profitable. But there were some there that we considered and we thought about. The valuation didn't get to a point where it sort of stacked up for us. We found some offshore. Like Flutter is actually not an 80% online business. It's effectively quasi a tech. It's a tech business in that sense, and that most of its sales do come through mobile or computer, etc. So that's effective for us like a tech stock, but it's a sports book.
Yeah.
With great collection of assets, and if you think about it, they've probably got one of the preeminent brands in the US with FanDuel, which they own 58% of, for a rapidly opening up US sports betting market. So, and they own Sportsbet Australia with BetEasy with the merger with the Stars Group. So we look at that and go, that's a tremendous business. It's hard to replicate that in Australia. So I think of that sort of covers a few things for us on tech.
Yeah.
It serves a few masters. And then as I mentioned earlier, Auto Trader is effectively that style of business. It's a cyclical tech business because it is used car sales and some new car sales. So when the economy turns over a bit, used car sales will fall typically. But it does recover very quickly. And again, you're buying a business with a dominant market position.
A couple of notable exclusions, Vince. I notice staples like Coles, Woolies don't feature in the top five. Mm-hmm. I know Perpetual's been supporters particularly of Woolies in the past. Also note the Big Four, a notable absence from some of your larger positions. Could you talk me through the exclusions on those fronts, why they don't feature?
So initially we had some of those, so the Woolies, some of the staples in the portfolio, and they were the early winners in this. Coles, Metcash, a lot of those, the healthcare stocks in particular, they were one of the very early winners where everyone was, again, I talked about people trying to buy short-term certainty. And given the hoarding that was going on, Woolies and those sort of names did particularly well. But for me, that was enough to, the valuation spread between names like that and stocks which are cyclical or had been beaten for a short-term reason, short-term earnings hit, become so extreme. I wanted to use those sort of stocks to fund these newer names. And still like the quality of Woolies, all those sort of businesses, but they're probably over-earning at some level at the moment. So, they were a funding source for us. So we're selling those to buy these other names. And with the Big Four banks, we actually traded a bit into them. So when NAB did the raising, we participated in the raising. ANZ we went back into at $16 around there. We look at that was quite cheap, big discounts to book value. As my analyst said to me, if you're not going to buy an Australian bank at a discount to book value, you never will. So, and given the underlying economics, and there was quite around a fear about further capital raisings, etc. But they've rebounded pretty aggressively, trading a book. They could probably go on a bit more about it, but we're finding a bit more value in some of those industrial cyclicals still. So we're sort of parking our money in those parts because there's still a bit more upside, I feel, in those. It's not to say we won't go back into the banks. And we took on a big position in Austbrokers as well. And it's fallen from $13, $14 down to $8.50, $9.50 type range. High quality business. So I've taken financials exposure a bit differently this time. That's a 5% position in the pick. So we've sort of played it a little bit differently this time.